Today, 80% of businesses don't sell. To be a part of the 20% that do, and at maximum value, you'll need a successful strategy. Welcome to the Defenders of Business Value podcast, where we interview today's top professional advisors who help business owners create, preserve, and most importantly, transfer value. If you want actionable tips that will increase your business value, stay tuned. The podcast starts now with your host, Ed Misogland.
On today's show, we have Greg Stanley. Greg is a friend of mine. I've known him for 25 years or so, and he has a company by the name of Accelerant Consultants. And Accelerant Consultants, they do some pretty spectacular things. You see, they help business owners understand where revenue growth is. They look into the untapped areas of the organization and make sure that the sales process is optimized. And so as we talk about value, you know, we often spend a lot of time evaluating the engine, meaning the operating expenses and how to maximize profitability. But once that engine is built, it's time to add gas. And that's where Greg comes in. So I hope you enjoy my conversation with Greg Stanley of Accelerant Consultants. I'm your host, Ed Misogland. I teach business owners how to identify and remove risks in their businesses so they can sell the business at maximum value when they want, how they want, and to whom they want. On today's show, I'm thrilled to welcome my friend, Greg Stanley of Accelerant Consultants. Greg has had a successful career over 25 years in business and community leadership, building practices, sales, and marketing teams and channel programs for SupportNet, Arrow Electronics, PricewaterhouseCoopers, and Smart IT before helping many clients across North America. While at PricewaterhouseCoopers, Greg helped build a technology security practice from the ground up before building a marketing and sales team for the Indiana, Ohio, Kentucky region that was not in existence prior to him taking the role of Managing Director of Sales and Marketing. While at PricewaterhouseCoopers, Greg served on a 7-partner leadership council for the region and was responsible for revenue generation for a market with over 70 partners and more than 700 staff, as well as a go-to-market strategy, development, and execution for the market. Personally, Greg has served on boards of Kids Voice, JDRF, and the Butler Business Consulting Group, and he currently serves as the chair of the Lacey School of Business Board of Visitors at Butler University. So, Greg, welcome to the show.
Thanks, Ed. It's a pleasure to join you.
So I certainly gave a little bit about you, but tell us something that we should know that's not in your bio.
Yeah, thanks, Ed. I think it's really important to note that while minimizing risk is a key component to enhancing valuation of a business, so is the ability to capitalize on opportunity. In my experiences with small and mid-sized businesses, I saw a significant gap in many companies' ability to build a revenue function that not only drives top-line growth, but does so in a way that enhances valuation. I launched Accelerant Consultants 2 years ago to help the owners of these companies make their businesses more valuable by growing the right way with a high level of discipline and intentionality.
I mean, I guess when you launched Accelerant, what was the deficit that you saw in the marketplace that prompted you to launch it?
You know, it was interesting. What I saw was there are many business owners with great ideas that have propelled the business on their backs for a period of time and then wanted to enhance growth and scale by hiring a sales team or by developing a marketing program. Most of these business owners didn't come from a background of sales and marketing. They came from a background of technology, or they came from a background of chemical engineering, or they came from a background of orthotics and a healthcare training and history. I would equate it to myself being a career person in sales and marketing, being put in charge of running a surgery center from a business operations perspective, and then asked to go into a surgery room and prepare and execute surgeries. I'm not qualified to do that. And many of these business owners, while they had good business intuition and good business sense, had never actually hired salespeople. They had never actually developed a commission program that didn't drive complacency and drove the right behaviors that built valuation. They weren't necessarily organizational strategists. it was through sheer will and blood, sweat, and tears that they propelled the business to where it was. And then the hiring process and the execution, once they decided to go into their business and scale it and build a revenue function, was not necessarily done in a way that was going to lead to success. And so I saw a significant market opportunity to help these small and medium-sized business owners retool their business processes, retool their revenue functions, and really take some best practices from both smaller and larger companies, incorporate those into their businesses, and hopefully do so in a way that maximizes valuation for them.
Yeah, when I'm working with business owners and we're talking about value, and especially value gap, so my opinion versus theirs, there's a difference. And when we talk about increasing value, they focus on revenue. But I know that increasing revenue is understating the challenge in front of them. Can you talk a little bit more about your holistic view of increasing revenue and the likely deficiencies that are typically omitted when deploying that kind of strategy?
It's interesting, Ed, because many of these businesses that I go in as well, they say things are going great. I grew from 8 million to 10 million to 13 million to 17 million over the last 4 years. And what could be better? Top line growth looks great. However, because they only focus on top line growth, if things like profitability, customer retention and expansion, those types of things aren't keeping pace, the business might actually become bigger from a top line revenue perspective, but worth less in the market, because they're not keeping pace with what is expected from an industry standard perspective relative to driving revenue. They also don't consider necessarily things like revenue distribution, which I know your firm looks at pretty heavily as well as you're going through the valuation perspective. If you grow from 8 million to 17 million on the backs of 2 customers, when you talk about mitigating risk, there's a high degree of risk that if one of those customers were to leave, a significant amount of the revenue goes away, and therefore you're going to see a discount from a valuation perspective.
Yeah, and I think a lot of business owners just underestimate that, revenue is good, but it costs money to generate that revenue. It's not, and I think that's one of the beauties of your practice is that you're looking at it from a 360-degree view of, all right, we're going to increase revenue by X%. Well, what does this do throughout the organization? Not only from staffing, but also from operationally speaking. What I was alluding to is that, it costs money to increase revenue. And I think business owners just assume, well, I'm just going to keep doing more of what I'm doing. Well, that doesn't always equate to value increasing. Now, if you're able to optimize your operating expenses, that's where, when you can pick up 2-3 points on your profit margin, there's where the gravy is,
You're absolutely right. And I think that is a lot of a function of just the maturity cycle of a business. And in a lot of cases, businesses start out and are founded based on the premise of, I've got to make payroll. And in order to make payroll, I've got to do stuff for money. And they tend to delude themselves, and they tend to chase the next shiny object and be willing to do effectively anything for money as long as it brings top-line revenue in the door. As businesses mature, to your point, they really should be looking at what's the cost of that incremental business that I'm taking in, because every dollar of revenue has costs associated with it. Whether it's a customer that has a huge volume of small orders, whether they're high maintenance from a support standpoint, whether they're not treating your employees well and they're creating turnover in your organization, there are a lot of factors that will lead to a customer being a good customer or a bad customer, or good revenue or bad revenue. And so I think to the extent those other intangibles, if you will, are not considered in the process, and those associated costs that are affiliated with the revenue, the incremental revenue that's being brought in, to the extent those aren't considered, a business is really doing itself a disservice from a valuation perspective.
Yeah, I hear you. So many business owners blend sales and marketing. Those aren't different silos. They're one. They're just all lopped together. So how does a business owner, that perhaps may not be able, that is wearing many hats, how does the business owner separate the two? I mean, I assume that you're consulting with businesses, and that is very important that you define those roles. So how do you do that?
My view is, and what I've seen in a lot of small businesses, not only do they blend sales and marketing, they're really confused in terms of what constitutes both sales and marketing, which are very different but highly complementary things. A lot of business owners will very randomly and without a lot of intentionality throw money at the market to try to proliferate their brand. They'll go to trade shows and they'll speak at an event and they'll sponsor a table at a not-for-profit event. In my view, marketing needs to be done in a way like any other business investment where there's, again, a high level of intentionality. There is a high level of integration with the sales function. And those two are treated as a fully integrated continuum to build a larger customer base and grow within the existing customer base. I think there are many so-called experts out there that will talk about customer-based marketing. They'll talk about how all you need to do is get on the internet, have views and have touches, and people will just magically buy your product or service. I am highly opposed to that approach. I think while it is good to have a brand that is relatively prolific, especially if you've got a highly developed value proposition and can articulate that in the marketplace, it's very important to make sure that you have a sales force that has the ability to back that up, create relationships, understand customer issues, build trust with customers, have some cadence of contact that the customers are going to appreciate and is going to be viewed as valuable, and not just be overwhelmed with content that you're producing, much of which never gets read or paid attention to in the marketplace because there's just so much noise at this point.
Yeah, I was talking to another subject matter expert, and he was saying the same thing, that it's the same thing, rinse and repeat. You hear the same message, you hear this is what you need to do, and it just becomes, is this right, or is this just curated content? And I think where you're heading, that the customer is different these days. It's not the same customer that you could just call up, develop the relationship, and you're off to the races. Now there's a difference. Now there's that sales cycle is probably longer, and there's more due diligence. There's more access to vetting the people that the business owner works with. So along those lines, how do you quantify a good customer? As I believe part of your service is optimizing who that customer is that's the best avatar for the business.
What I've seen with the customers or clients that I've worked with is that many business owners think that the best customers they have are the ones driving the most top-line revenue. However, and this is really speaking to your point as well, if these customers are only focused on low price, they do not or cannot consume the entire breadth of products or services a company sells, they're low margin, or they take an extraordinary amount of resources and expense to support, these are often the worst customers that you can have because they can degrade valuation. The definition of a good customer can vary based on the goals of the business, but typically those customers who understand and appreciate your business value proposition and are willing to pay a higher price or a premium for it, those who represent both revenue and profitability expansion opportunities, and those who by industry or brand affiliation are recognizable and with whom that affiliation will be viewed positively by the market and those that are potential investors or buyers of your business, those tend to be your best customers.
Yeah, but the funny thing is when you're talking to a business owner and you say, yeah, you need to, the composition of your customers, they aren't optimized, or you can get better customers. And I mean, if I'm a business owner, I start to cringe, like, oh my goodness, you're really asking me to jettison, they may not be the best customer, but they've been with me for 20 years, or they've, pick whatever reason. I mean, how do you get around that? Because I'm certain there's a number of business owners that are looking at their customer list saying, yeah, I could probably increase here, and here, but I've known this guy for 30 years. I mean, I couldn't do that. How do you get around that?
You're absolutely right. And it is really a function of unwinding the mentality, which is sort of the small business mentality before you get into the mid-sized business mentality, and before you get to the point where you're trying to market and sell your business of any customer is a good customer and any revenue is good revenue. And I think the longer businesses, and I'm sure we'll talk more in depth about this here in a bit, but the more runway that businesses give themselves to really architect a customer portfolio that's going to be desirable to the market when they do go to market, those are the businesses that are going to demand a premium when it comes to valuation. Those that just have a random assortment of customers that they've gotten over time and have continued to support and service because they're driving a high level of top line revenue, or because they've known them for 30 years, or whatever the excuse may be, they need to fall in line with the organization's goals relative to brand affiliation, relative to potentially industry affiliation, certainly relative to profitability, and relative to growth opportunity.
Yeah, because I mean, everybody talks a lot about customer concentration. Well, you know what? There's more to it than customer concentration. It is where is the profit in your customer base? So yeah, I can totally see that. And that's a little bit deeper dive. And I don't think everybody, like I said, everybody talks about concentration. Not everyone talks about profitability.
You're absolutely right. And it's very difficult and usually a one-time opportunity to fire a client. So you've got to be really sure once you go down that path of jettisoning certain clients because of low profitability that you've tried everything you can to save that relationship. You've had conversations about needing to increase your prices to make sure that you're maintaining the level of profitability you need to support a certain valuation, that you've reinforced your value proposition, that you really uncovered every stone that would allow you to save that relationship. Because again, once you fire a customer one time, it's really hard to recover that relationship. However, having said that, there are businesses that would become more valuable and more profitable by firing even some of their biggest customers that produce the highest top line revenue, because when they get down to it, and to our earlier conversation, subtract the amount of cost and effort and operational difficulty that is often caused by some of these larger customers, they actually get more profitable and more valuable by becoming smaller from the top line perspective.
Yeah. Well, as we look at customers, I mean, everybody wants sticky customers, somebody that is gonna stay with the business. And the latest and greatest is these recurring revenue models. And there's just, from subscription based to membership to a variety of others. I think there's 8 or 9 different types of subscription models. And from a value standpoint, recurring revenue certainly amplifies value, but it's not available for every business. I don't think, and some would probably argue with me about that. But what do you see in the marketplace as far as recurring revenue?
Yeah, I think recurring revenue can really be defined in a couple of different ways. For some companies, recurring revenue means exactly what you talked about, operating in a SaaS model or a subscription model with multi-year contracts in place, while for others it means selling more to the same company and making sure you maintain that revenue stream. I try to encourage my clients to consider 3 aspects of revenue growth: retention of existing or good customers. And I think it needs to be defined what a good customer looks like before you focus too much on retention. But to the extent you have those quote unquote good customers categorized, certainly the retention of those, it's hard to create growth if you've got customer in the front door as you've got customers leaving out of the back door. Capitalizing on expansion opportunities within those good customers, and then expanding into net new customers. And I think that's what the market tends to value. They want to see organizations adding net new brands to their portfolio while also keeping up with profitability metrics and those types of things. They want to see expansion within existing customers. So whether that recurring revenue comes through extremely high customer retention rate or through multi-year guaranteed contracts, it's really the predictability that we're seeing that drives the higher valuation. When you have customers that could defect at any point, or you've got a high level of customer turnover, that creates volatility in the revenue model. It creates risk, and therefore it degrades the valuation of the companies.
Yeah, and the same thing. We're seeing that the greater understanding of your customer base, how much it costs to get them, how much it costs to keep them, and how much it costs to service them, it helps value. That the understanding of what you have, as opposed to I'm pushing out service, I'm pushing out product, and hopefully they'll buy. but instead there's a greater understanding of, all right, this is why they buy from me. This is, here's my secret sauce. This is what makes our company unique. And that's the recurring, or like you were saying, the predictability. That is what we see from an amplified value standpoint.
Absolutely.
So when the business owners that you work with, and this is just I'm just curious to know, are they more lifestyle driven or legacy driven in today's market?
I try to get my clients to refocus on the legacy aspect or the potential reality, and it is going to be a reality at some point, that a transition is going to occur. I think a lot of business owners get really comfortable whether they're taking $400,000 a year out of the business or $800,000 a year or $1.5 million out of the business or whatever they're taking out of a year. They've got a very nice, comfortable living. They've got potentially a lake house and a boat and all that they need. And they feel like the business is really well running as a result. As long as they can continue to take that kind of money out of the business and enrich their families, and everything's good. I think the challenge is you get many of these business owners that wake up one day and say, I've done this for 25 years and I'm just tired. I'm ready to get out. Or I see some impending event coming in the market that's going to potentially devalue my business. Or I'm going to age out of the business and I'm just not in the kind of health that I was before. And whether that business transition occurs as a result of aging out of the business, it occurs as a result of an ESOP, or taking a strategic buyer and allowing the strategic buyer to invest in the company, or take the private equity investment, or passing, frankly, the asset down to the heirs of the original owners. If that business owner isn't over time focused on creating the valuation in their business, that is usually the owner's largest asset that they own, bigger than their house oftentimes, bigger than the cars they have, bigger than their lake house, bigger than whatever other asset they have. At some point, like I said, there is going to be a transaction or a transition event that occurs, and to the extent that event isn't prepared for, the owners only have one shot at this. They put their blood, sweat, and tears a lot of times for a number of years and even decades into these businesses. If they haven't intentionally gone about building the business in a way that maximizes valuation, they've really missed their one opportunity to get out of the business in a way that's going to be most meaningful for themselves and their families.
Yeah, and we see a lot of that too. And what I think the greatest challenge that the business owner has is at what point to look at it more as an income producing asset versus a lifestyle business. Not that there's any difference. I mean, at the end of the day, a lifestyle business is sellable. I mean, that's the win. So you can, if you're able to sell that company, that's ultimately the win for the business owner. But the reason I asked the question is because a lot of the business owners that we work with, or that come through our door, is they're the guys that drive value. They're the guys that have been doing it for 30 or 40 years, and they're out in the marketplace, and that's what gives them the juice. So how, and I know you consult with lots of businesses that are in this predicament. How does that business owner move everything that's in their head, the relationships that they have, to perhaps a number two or to a sales group behind him? How do you do that?
Yeah, I think the key is a couple of things. Number one, the owner's willingness and ability to just let go. The owners start out as clearly the most important person in the business. They've driven the growth. They've done it through sheer will. They've created a great business. But if they are the business, or the business is defined by them and their relationships and their ability to drive revenue, and they're taken out of the business, and that revenue is put at risk, then they're devaluing the business by staying that integrated and integrally involved in the business. The key really is to hire really good people and make sure that the people you hire are trained and are running the business in your image as a business owner and are executing in a way that you want to, without putting yourself in a position to have to feel like you have to micromanage people. If you've got to micromanage people, you've got the wrong people. I would encourage business owners to maybe think about hiring fewer people, but better people. There have been a lot of books that have been written in terms of the effect of hiring fewer and better people and what that does to the profitability of a business. Scaling Up certainly mentions that by Vern Harnish. And so I think the key is hiring the right people, putting them in a place where their job is defined, giving them the ability to do their job, and then start to slowly extract yourself bit by bit from the business. You don't, on day one, hand the keys over and say, okay, I've run this for 25 years. You were hired to do a job, now take over the business. But over time, start to take some of the functions that have previously been done as an owner-operator and evolve into an owner-leader. And I think that's where some of the owners have some challenge. It does require a level of confidence, and it does require a level of letting go, and it does require a level of trust in the employees that have been hired. But that's why you hire and pay them. And if you can't do that, you've got the wrong people in place. And if you refuse to let go of certain aspects of your business and continue to be really the sole reason the business exists and is as profitable and successful as it is, you're doing yourself a disservice, because when that transaction or transition takes place, you will see less value, because whoever buys or invests in your business, they're not doing it because of you. As the business owner, you get a big check, and you get a big check for going away, and for the management team that you built, and for the customer base that you built, and for your unique and differentiating value proposition.
Yeah. The funny thing is that, business owner recognize that, but boy, it's like turning an aircraft carrier to get them to buy into all of these things that they have to do in order to move it from, just me being the business to this business being able to operate without me.
Yeah. Well, and as you know, buyers oftentimes look at a key man strategy. So what has the business owner done to either share some of the equity or assign the business leaders that are effective and really running the company at the time of their departure to ensure that they're sticking around and continuing to maintain continuity within the business, within the relationships with customers, within the operations aspect of the business. And so, again, the sooner that can happen, and the sooner the business owner can hire those people that they place a high degree of trust in, and really understand the fact that there is going to be nobody that will ever be hired into the business that has as much passion as the original owner of the business. It's just a fact of life. They're employees. They didn't put their hearts and souls into building the business, but they have key skills, hopefully, that can be leveraged that would be of value to a potential investor or acquirer of the business. And they need to make sure that they create that cohesion and also create those capabilities within those people by letting them do their jobs that will sustain the business going forward.
Yeah. Tell me a little bit about your service. When should a business owner, I guess, when should they recognize in their own business that it's time to engage someone like yourself? And what should they look for, and explain how your process works?
Yeah, so I would say a couple of things relative to that. I'd like to think that any business at any stage could potentially use the services that my firm provides. Anyone who is looking to, with a higher degree of intentionality, build a business whose valuation will increase as a result of not only generating more top-line sales, but in running a process and creating a revenue-generating infrastructure that is much more effective and scalable and efficient than probably they've run in the past. It's interesting in this economic climate that we have, and if you talk about one area where I get any resistance, there are a lot of companies that will say, revenue problem. I don't have a revenue problem. I'm growing at 15% a year, and clearly my key issue is I can't find enough people for the manufacturing floor to fulfill all the orders. My view is we are in an unprecedented economic time, and one that has been going on for a long period of time. And I think a lot of business owners have been lured into thinking that their business is a little bit infallible and is going to grow no matter what. I'd rather take the position that even in a good economic time, when the business is growing, that's the time when you have the cash to invest to make sure that you're doing things right, as opposed to waiting until there's a downturn in the market and then all of a sudden your revenues start to decline. You built a cost structure that's dependent upon those revenues to be able to support itself and support payroll and support the operational costs. That's the wrong time to find out that you could have done things more effectively or more efficiently. Also, I would say once business owners start thinking about, at some point there's going to be a transition. It could be a year and a half out. It could be 3 years out. It could be 5 years out. The farther in advance they think about that transition, and again, it could be a strategic buyer that comes in to buy. It could be taking private equity money. It could be launching an ESOP. Whatever it is that they're going to take a large sum of money out of the business, the farther in advance of that event they can start thinking about building this revenue function in a way that is accretive to valuation, the better off they're going to be once they receive that check. You also asked about how my process works and what services I tend to offer. I tend to go into companies in one of a couple of capacities. Typically, it will be in the form of an assessment. So I'll help companies take a look at their leadership team, their process of hiring and managing salespeople, their KPIs, all the things that tend to be at a management or leadership level from a sales team perspective. I'll then help them assess their sales team if they have one in place, and I help clients as well as other employers in the past build sales teams from the ground up. But take a look at their team to say, okay, do we have the right people in the right seats, and can they do they have the desire and do they have the capacity to be effective in this role? Then I take a look at what those underlying supporting infrastructure pieces or components are that can really enable a sales team to be effective. So things like, do you have the right commission structure in place that drives the right behavior that will enhance valuation? Do you have the right level of integration between marketing and sales? Do you have the right value proposition that the market's going to accept and understand that is differentiated and is worth paying a premium for? And are you articulating that consistently in the marketplace? So I'll do an assessment of those three components, come back with a number of recommendations, and clients certainly are free to implement those recommendations on their own if they're comfortable doing so, and or I've stayed on a retainer basis with a number of clients that have needed additional help in the implementation of those and have even asked me to take on a role of a fractional, call it a VP of sales, to help them make sure that I'm transferring some knowledge and putting them in the best possible position to hire the person that will effectively be my replacement once my project has run its course.
I guess, where is your sweet spot as far as the customers that you work with? Who's your ideal customer?
I would say typically those customers are businesses, and it's going to be the business owner in almost every case that's going to engage me. But those that are in that $5 million in revenue to $100 or $150 million in revenue, who either think they could use some improvement in their sales function, who may have lost a sales leader and they're looking to retool things, who have never had a sales leader and have had the sales function reporting to an owner that does not have a marketing and sales background. Those companies that are looking to scale. I originally thought, just based on my background, that many of my clients would either be in the professional services realms or the technology realms. What I found is there is enough commonality in building an effective sales organization or revenue function across industry that I've been engaged by companies that are in the hospital and healthcare safety arena, in the oil field services industry, in the technology security industry, in the orthotics and clinical businesses, in the benefit plan administration businesses. So it really runs the gamut from an industry perspective and has really become a North American play. I've got clients in Atlanta. I've got clients on the East Coast. I've got clients in Calgary, Canada. So it has certainly grown much farther afield and much more from an industry perspective than I had expected. But those companies all have very common issues that I feel like my experience and my firm's delivery capabilities have the ability to address for these business owners.
So my last question is that if you had one piece of advice to give our listeners that would have the most immediate impact on their business, what would it be?
I would say it's doing everything they do with a high level of intentionality that's focused on valuation. Like I mentioned earlier in the podcast, the ownership has one opportunity to sell the business, and the more runway they give themselves to build it with the right customer base, with the right level of profitability, with the right level of people in place, with the right commission structure for their sales team that drives the right behaviors and drives the right customers, when they've done the right amount of market and target segmentation, and they really understand as a business who those customers are that are going to be most coveted and create the most value in their business. There's an entire continuum that needs to be managed, and it's really stopping doing things for money and really starting to operate with a high degree of intentionality that I'd like to think Accelerant Consultants would be well positioned to help them develop.
I agree. So what's the best way we can connect with you?
Certainly you can connect through my website, which is accelerantconsultants.com. My cell phone number is 317-847-6290. On August 7th, I will be participating in a session driven by the Old National Bank Center for Closely Held Businesses through Butler University, and be giving a session there. And certainly once on the website, there are a number of white papers I'd like to think would inspire some thought among business owners. Things like why the commission structure they currently have may not be driving the right amount of value and growth in the business. Things like how you grow not only in top-line revenue, but how you grow the right way. So I would invite anyone to get on the website, download those white papers, and certainly feel free to contact me. I'd love to have these conversations with business owners and understand how they built their businesses, and even providing tidbits of advice over the course of a lunch. I'm happy to do if it helps the small business community.
Right on. Well, I will link all of that in the show notes. So, Greg, I can't tell you how much I appreciated your time. I learned a lot about revenue and sales, and how that. I think the big takeaway was that it all can even top line, and intuitively you understand that it all contributes to value, but understanding the sub-segments of revenue and how that translates into value was a big win. So I appreciate that. So thank you so much for being with us. And anything else before we sign off?
No, I think we're in great shape. I really appreciate you having me, and it was a pleasure to be on, and hopefully this will help some small business owners think a little bit differently and maximize their exit when and if that event occurs.
All right. Well, thanks so much, and cheers. Appreciate it.
Thanks, Ed. Have a great day.
Thank you for joining the Defenders of Business Value podcast. If you're preparing your business for sale, visit LegacyTransitionAdvisors.com or text EXIT to 35893 to begin your journey to maximum saleable value. If you want more episodes packed with strategies to transfer maximum value in your business, visit DefendersOfBusinessValue.com. Better yet, subscribe now so you don't miss the future episodes. This program is copyright Legacy Transition Advisors, LLC. All rights reserved.